Good afternoon, class, and welcome to our virtual class in our subject Fundamentals of Accounting Theory and Practice. And our discussion today is the Introduction to Corporation. And I'm your professor, Susan Maminta from AMA East Rizal Branch. Today's discussion, we have the following learning outcomes. One is to define corporation and understand its attributes, enumerate and understand the characteristics of corporation, understand the advantages and disadvantages, and its comparison with partnership. Enumerate and define the classes of corporation, identify the components of a corporation, learn the steps in the formation of a corporation, enumerate the contents of the articles of incorporation and bylaws of the corporation. Enumerate the basic rights of shareholder and define important terminologies used for corporate accounting. Section 2 of the Corporation Code of the Philippines defines corporation as an artificial being created by operation of law, having the rights of succession and the powers, attributes, and properties expressly authorized by law or incidents to its existence. It is an artificial being because the law has given its rights, powers, and liabilities which are almost the same as a natural person. A batas pambansa bilang 68 is under Corporation Code of the Philippines. And a corporation can act only through its board of directors, can hold properties, enter into contract, can sue and be sued. It has the right of succession. Corporation may continue its operation notwithstanding the death, insolvency, or incapacity of the board of directors, officers, and even employees. What are the characteristics of a corporation? It has a separate legal entity. There is a continuous life and ownership, no mutual agency, limited shareholders' liability, ownership and management are separated, and corporate taxation, and there is a government regulations for this corporation type of business. There are advantages of forming a corporation. One, a corporation has a limited liability. It has greater source of capital. Ownership are transferable. There is a perpetual life. And there is what we call a pass-through, where profits and losses are passed through shareholders. For disadvantages, one is there is a double taxation as dividends are also taxable. There is excessive tax filing and substantial amounts of paperwork. Independent management, that means the management team of a corporation can operate the business without any real oversight from the owners. For a classification of corporations, we have one is stock corporation. These are corporations with their share capital or capital stock dividend into shares of stocks, the holders of which are entitled to receive dividends or share in the corporate earnings, like a corporation, Ayala, San Miguel, Meralco, SM, and Universal Robina. Those are just examples. Another type of corporation is a non-stock. A non-stock corporation are corporations that do not issue shares of stocks. Example of these are the labor organizations, social charitable organizations, civic association organization, and professional organizations. There are also other kinds of corporation. We have the domestic and foreign corporation. A domestic, that means it is incorporated under Philippine laws, while a foreign corporation incorporated in another country and does business across other country. Private and public corporation. A private can be a stock or non-stock for private purposes, while a public corporation are those organized for public purposes and connected with the government. We have also the closed and open corporations. A closed corporations, that means shares are owned by immediate members of the family. But an open corporation where shareholders or members have the right to vote. We have also these government-owned or controlled corporations. These are corporations organized by the government. A multinational corporation that are created in one country and conducting business in another country. A religious organization is also a corporation, and those that are created for religious purposes. So what are the components of a corporation? An incorporators are the shareholders or members who originally formed the corporation and are the signatories in the articles of incorporation that is registered with the Securities and Exchange Commission. Corporators are the persons who compose the corporation, including the incorporators, the shareholders, or the members. Shareholders are the corporators of a stock corporation, while members are those who compose the non-stock corporations. There are steps in the formation of a corporation, or we can also consider these are the requirements. One is that 5 or more persons, but not exceeding 15, must prepare an application for charter, and that is the articles of incorporation, and must be signed and file it with the Securities and Exchange Commission. A sworn affidavit by the organization's treasurer stating that at least 25% of the entire number of authorized shares of capital stocks has been subscribed, and that 25% of the total subscription has been paid either in cash or property of equal value. Filing fees has to be paid with a SEC, and if the SEC required that the application should be published in national newspaper. The certificate of incorporation will be handed by SEC commissioner to the applicants once it is approved. The shareholder will meet to accept the charter and adopt the bylaws. What are the contents of the articles of incorporation? 1, of course, the name of the corporation. Number 2, the purpose of the corporation. Number 3, the place of the principal office of the corporation that is within the Philippines. Number 4, the term of existence of the corporation. Number 5, the name, nationalities, and residences of the incorporators. Number 6, the number of the directors or trustees, not less than 5 but not more than 15. Number 7, the name of the person who shall act as directors until the first regular directors are duly elected and qualified based on the code. Number 8, if the corporation is a stock corporation, the amount of authorized share capital in local money of the Philippines and the number of shares into which it is divided, and the par value per share, the names, nationalities, and addresses of the original subscribers and the amount subscribed and paid. Number 9, if the corporation is a non-stock corporation, the amount of capital, the names, nationals, and residences of the contributors, and their amount of contributions. Bylaws of a corporation within a month after receiving the certificate of incorporation by the SEC should adopt a code of bylaws for its government and should be consistent with the code. Bylaws are the permanent and continuing rules of action for the governance of a corporation and the people composing it. Bylaws of the corporation should provide for the following. 1 is the time, place, and manner of calling and conducting regular or special meetings of directors or trustees. Number 2, the time, place, and manner of calling, conducting regular or special meetings of the stockholders or members. Number 3, the required quorum in meeting of stockholders or members and the manner of voting therein. Number 4, the form of proxies of shareholder or members and the manner of voting them. Number 5, the qualifications, duties, and compensations of the directors or trustees, officers, and employees. Number 6, the time of holding of annual election of directors or trustees and the mode of manner of giving thereof. Number 7, the manner of election or appointment and the term of office of all officers other than directors or trustees. Number 8, the penalties for violation of the bylaws. Number 9, in the case of a stock corporation, the manner of issuing stock certificates. And number 10, other matters as may be necessary for the proper and convenient transactions of its corporate business and affairs. What are the rights of the shareholders? Unless regulated in the Articles of Incorporation, each share of stocks permits the holder to the following rights. 1 is the right to vote in the meetings of the shareholders. Number 2, right to share in the income or earnings of the corporation. Number 3, right to share in the assets of the corporation after all its obligations are settled. Number 4, preemptive right of stocks. That means the right to share, subscribe to a new stocks of the same class once available for issuance by the corporation. Okay, now let's proceed with the important terminologies pertinent to corporate accounting. Stockholders' equity means the owner's equity of a corporation. And when we say capital stocks or share capital, that means these are the authorized capital stocks and the capital of the corporation. It is the amount prescribed by the charter to be subscribed and paid by the shareholders of the corporation. A share of stocks is the basic unit of stock or unit of ownership in a corporation. Stock certificate, this is the evidence of ownership of shares issued to shareholder for its fully paid investments. A common stock is a kind of stock representing ownership in a corporation where the holders exercise control by electing board of directors and vote on company policies. A preferred stock is a kind of ownership in a corporation that has special privilege on dividends and assets over the common stock. A treasury stock is the legally issued, fully paid, and later on reacquired by the issuing company. Paid in capital or contributed capital, this is the shareholders' investment in the corporation. Additional paid-up capital or share premium pertains to the amount paid by the investors in excess of the par value of the shares issued by the corporation. And retained earnings is the earnings or income derived from the profitable operations of a corporation. Dividend is the distribution of the earnings of a corporation to its shareholders. And par value is the stated value of stocks printed in the stock certificate, and it is the amount that the shares of stock should be sold to the public. So that ends my discussion today, and I'm now giving you my last slide. And again, class, thank you for listening.